Got a real interesting UK dividend stock for you today on the FTSE 100. It is in fact the Ashstead Group, ticker symbol AHT, more commonly referred to as Sunbelt Rentals or Ashstead Plant Hire Co. The group here just being the overall legal entity. They are currently trading at £4,807, £48 sterling as of the 10th of November. Over the last year, they've had a wee bit of a roller coaster ride. If we drop it out to 5 years, we can see that they had a steady rise from 2020 all the way to 2021. Bit of a decline as of recently. Height of about £63 and a low point of nearly £14 back in March of 2020. So, share price seems to be quite volatile. £14 to £60. That's quite a difference in range. The 52-week range, there is quite a difference. Yield of 1.39, but that's not to deter you from the stock. This stock is in fact very good in a lot of metrics, and we're going to look into them right now. First things first, I'm changing it up a wee bit for the videos. I want to show you what 100 shares of Ashstead Group would have got you. They pay dividends twice per year, so every 6 months. They've decent cover, and the ex-dividend date is the 19th of January 2023. That means that on the 18th, you need to own the share in order to be entitled to the dividend payment. Remember, it's always a day before the ex-dividend date. If you had 100 shares, your previous payment would have been £57.28. And as it's trading at £48, simple maths, £4,800 worth of shares would get you that 1.4 yield. So you'd probably be getting over the year about, quick maths, they're interim payments. Okay, this is actually an interesting point to throw out. Interim payments and final payments can differ. So in the case of Ashtead here, the interim is only about 7 pence. As you can see, it does grow year on year, but it sits around 6-7 pence and growing. And then 33 pence to 35 pence and growing is their final. Some companies do their dividends this way. There is a variety of reasons for it. I don't have a real answer, but do always keep an eye out if you were ever buying into a stock. Of course, not financial advice, but if you were, be sure to see if it's the final or the interim date, just so you're aware as to why you might get a lower payment some months and a higher payment on the other half of the year. Their graph is looking pretty much as good as it gets. 2013, it was 7.5 pence annually, and we're now up to 42 pence 15. So that's a growing dividend per share every year, and that's great to see. They haven't had a single drop, and COVID didn't seem to shake them all that much. It just didn't increase as much as usual, and 2022 it looks like they're on course to continue. Jumping on to Simply Wall Street for the Ashstead Group, one of the best resources that I use. I'm going to use it in depth into any future video, and let's dive right into it. So in the year, it's down 23%. It's up 2% in the last 7 days. Their market cap is 21 billion. They are in the FTSE 100, so it's a pretty high cap there. And the price is there. The snowflake analysis for Simply Wall Street. I love using this, and it's very rare you get a real rounded, almost a perfect circle. If it was 4 out of 6, it would be a perfect circle here. Now, it is based on 6 elements. Valuation, or 5 elements, sorry. It's valuation, so it compares, is it undervalued compared to peers, industry, and its forecasted cash flows. Future, how's it going to do in the next 1 to 3 years. Past, how's it done in the last 5. Very good metrics to always look in. You want to see into the future, but you also want to see how they were doing to this point. That can give you even, a bit of an indication as to how they should do going into the next few years. Financial health, how strong it is, and if it's got manageable debt. Ashstead Group does have a high level of debt, but they are using it quite effectively. It's covered by cash flows, and we'll see that later in the video. Dividend scores 4 out of 6. They pay a good, reliable, sustainable dividend. The analysis overall, it's a good value stock with a proven track record, and it pays a dividend that's growing. All good things. Trading at 30% below its estimated fair value. Its earnings are forecasted to grow 6% per year. Its earnings have been growing over the last 5 years. I'm sure we'll see how COVID affected it. More to the point. Trading below our calculated price to earnings ratio. Risk analysis, the only issue at the moment, it has a high level of debt. But debt on this channel isn't a scary word. Some companies use debt amazingly. Some companies are like Games Workshop and have no debt. That different strokes for different folks. Some companies work well with debt. Some don't need it. Just all depends. But I would always recommend, don't look at debt and immediately go, oh no, only unless there's too much or it's not covered by, cash flow. There are a load of other things to look at. But price history and performance. This is a great wee chart that Simply Wall Street provides. You can see dividends, financials, strategies, maybe if there's any mergers or acquisitions, and their annual general meetings. You can click on them and it'll give you a wee bit of a breakdown. Now, Simply Wall Street is free to use, or there is a limit on the stocks that you can see per month in the free plan, but you get all of this visual data. News is a really good thing for any company. We can see, for example, a lot of these articles are on Simply Wall Street and they're, in-house. I would also recommend checking out the Motley Fool. It's a really good website for Dividend and just general UK stocks. But for this, like, for example, 4 measures that indicate that they're using debt reasonably well. You can read in depth into that. Here's why we think it's well worth watching the stock. Opportunities, first quarter earnings. It has a wee bit of a breakdown here, symbol wise. Maybe it's a wee announcement, or maybe it is like earning reviews. On down, you can see shareholder returns and their price volatility, and it's got I like how Simply Wall Street, red's bad and green's good, and you can work your way through all these points, and it does give you a wee bit of education. If you don't know what certain terms mean, you can just hover over and they'll tell you. I'm still learning an awful lot myself, but we can see a wee bit about the company, see their website. We'll have a look into their website and Sunbelt Rentals later in the video. Founded in 1947, 22,000 employees. Current CEO is Brendan Horgan. Some people go as in-depth as to actually look into the CEO and their track record. I don't personally do that, but it is definitely something that I could see useful in certain instances. Ashstead Group, just gives a wee bit of a breakdown. They do operate in the United States, the UK and Canada, so you're not just targeting the UK market with this company, you're actually getting a US market and Canada one as well. Fundamentals, their PE ratio's 18, we'll see how that stacks later on. Price to sales ratio is 2.9. So, market cap, the grey area, is 21 billion. Earnings is 1.1 and revenue of 7.3. Not too bad. What is their net profit margin? Sits around 16%. Okay, that's not too bad. Dividends, 1.5% yield, 26% payout ratio. So they are not giving out, like some companies, the payout ratio can go quite high depending on their situation. If they can't use the cash flow effectively, or they just want to return more to shareholders, they will start paying out more of their cash flow in the payout ratio. That is probably, because it's down at 26%, I would assume this company has an awful lot of room to grow, and so it isn't paying out as much, but it is growing the yield per year, so it will get there in the end. Or not yield, dividend per share. Okay. First off is valuation. We can see all the metrics here. You can go as deep into them as you want. What I'm going to actually start with, I always love to just pass, peer averages. It's putting them against the RS Group, Howden, Joinery, Bunzl and Diploma. I wouldn't say they're exactly direct competitors by any stretch. We can see industry average sits at around 12. And they're up at 18. I know it's in the red, but you've got to look between the lines. Let's see who is sitting here. HSS Hire Group, for example, sits a wee bit lower at 13. And who's below that? VP in the McFarlane Group. Okay. We can see a lot of other metrics here, their price to earnings versus fair ratio. And one of my favorite ones here is the share price versus fair value. This is based on a discounted cash flow model. What does that mean? It essentially is given a fair value for the stock based on its cash flow. Well, discounted cash flow model. And it's saying 30.2% undervalued. Current price of £48. It believes the fair price would be closer to £69.24. Do not use this as an exact method. It is just one of the many formulas. We'll look at intrinsic value on down. It's another metric you can use. If it is overvalued, I always kind of, throws up a wee bit of a red flag. I do like to go for undervalued stocks, so I do use these models quite a bit. It isn't my final decision, and don't use it as your final. Always look into every metric that you possibly can. Future growth, annual growth is projected to be 6%. That's not bad. Let's see, free cash flow as well is pretty high too. And they seem to have had a pretty good track record up to 2020, just before COVID hit. Bit of a dip. You expect that with most companies with a global pandemic. But future forecast isn't too bad. Let's go on down to their past performance. Now, over the last 5 years, they've had quality earnings, growing profit margin, earnings trend, and growth. Let's see here. Yeah, back in 2016, revenue was $3 billion and 500 million in earnings. Jumped to 2022, we have 8 billion in revenue, so nearly over double, and over double in earnings, while still maintaining a sort of 16% profit margin. Very nice. Okay, high quality earnings, and their net profit margin higher than last year. Down to, there is lots of metrics. You could get lost in this, but I'm going with the main ones, the ones that really I would go for. Financial health, short-term liabilities, pretty good. And long-term, they do have them down as a negative, as is their debt level, but they are reducing debt, and their coverage and interest coverage, perfect. So let's have a wee nosy here. As you can see, they have been growing their equity, but their debt has also been growing until 2020, to which they started reducing it and actually got nearly on top of it there. And they are growing. The debt isn't a super concerning thing for me looking at this company. That is because the debt coverage is well covered by operating cash flow. Its interest is also well covered at a 7.2 times coverage. That's good. Some people just don't like seeing lots of red, and that is fair enough. But look, they have 11 billion in long term, 3.1 billion in physical assets, 1.6 billion in receivables. Compare that to 5.6 billion in debt. Right, down to the dividend, 1.45%. Notable dividend? High, not really, but it's stable, it's growing, and it's well covered both by earnings and cash flow. Great. They don't even make the bottom 25%, but they are growing. You can see back in 2013 it was a 0.8% yield, growing almost to 2% in 2016. But due to their share price fluctuating, look what has been growing year on year, though, their dividend per share. That agrees with Dividend Max, and it's projected to continue to grow. Back in 2013, you were talking it was almost 10 pence per share. And they've grown it now to, what was that? 10 pence per share, and now it's 70 pence per share. That is a massive growth. That's 7 times. They're growing nearly by 10 pence per share every year. Fantastic to see. Cash payout, earnings payout, brilliant. Let's go down to ownership. I always like to just skim over. Insider bought 140 shares. That's nothing to know. Only worth 7,500. Owned mainly by institutions and then the general public. Top holding, BlackRock, followed by Vanguard and T. Rowe Price. That sounds about right. And when you see these guys in the mix, yeah, that's BlackRock and Vanguard for you. Okay, jumping over to Alpha Spread. I'm just going to quickly skim over this. Intrinsic value for the Ashstead Group is £111. Giving them a 57% undervaluation. Now, this is calculated using discounted cash flow model and a relative value and just averages of the two. There is worst case and there is best case. It's a free to use tool. You can check 3 companies every week. It's just a different way. You can look into seeing how it's calculated, and there is a load more that the website provides, but I just wanted to quickly go over it. Now, jumping into the Ashstead Group, this is their main website. For a lot of people, it'll give you a wee bit of a glance of the company, their values, the business model, leadership, everything. ESG, you can go into their investor center. Gives you everything from share price to shareholder information, financial calendars. A lot of people find these very useful. And they have their own inbuilt newsroom. Okay. Visit Sunbelt Rentals. In the UK, they have 181 stores. and their rental penetration is estimated at 75%. Okay, Sunbelt Rentals. A lot of you might be a wee bit more familiar. What do they rent? They give out access, step ladders, powered access, towers and platforms. They do all accommodation, all those, container units, barriers, bridges, greener equipment. They do power generation, heaters. They have lifts, lighting, non-mechanical, and then they go into plant, so you can get all heavy machinery from them as well. So they do everything from utility down to actual tools, all the way up to plant machinery. So they cover a fair amount. Our planet, and then going into environmental impact and whatnot. You can look as deep into this as you want. They are a very interesting company. I see them quite a lot in building sites over here. They probably have a wee bit more competition over here because we have some mega, hire centres that sort of dominate. But I've seen them quite a bit. I would say they're probably more popular in the UK mainland as a whole. Okay, jumping over to Trading 212, you can see that the dividend portfolio is actually up 4.4%. Now, we are a couple of weeks away from me actually doing the update on it, but nevertheless, this is the trading platform that I use. You can get a free share. Sometimes they run a wee promotion. The link's always in the description if you're looking at brokerage. The share can be worth up to £100. I got a wee Tesla one free the other day, so that was pretty neat. It's when you sign up to it, so... yeah, you get a free share and I get a free share, and it's a random value up to 100. If anyone's interested, the Ashstead Group, easy peasy. You just, go over to the wee search bar, AHT, bring them up here. You can explore all these. You can set alerts. You can see when the market opens, lots of advanced charts, bit of information, and some very useful graphs that kind of coincide with Simply Wall Street. So that is the Ashstead Group pretty much covered. Let me know what you think in the comments section below. Wee bit of a different video layout, but I hope continuing into the future we'll change things up, see what works, see what doesn't. And thank you for watching. I'll see you all in the next one. Bye bye.